Welcome to Beyond the SEAF Model. My name is Jack Kosar. This is effective for July 29th, 2024. Let's get started. The SEAF signals for this week: utilities, financial, and healthcare. Healthcare finally breaches, as we've been seeing it. We can see in the rainbow chart a little bit later, but healthcare has been attempting to jump in um, with showing some strength in the various weeks. Some of that weekly strength that we've been seeing kind of coming in and out has helped bring the tactical month and the strategic quarter up in time to get healthcare into the top three. Financials, utilities holds on, and we lose out on industrials as it drops into the neutral ranking. Some other kind of interesting things to note: technology here, not at the bottom, but showing extreme amounts of money, net flows coming out, as we're seeing a level in the 11 in the tactical month and the trading 11 in the trading week, being somewhat held up by this four spot. This used to be one for the last couple of weeks and slowly starting to peel off. So we should, as we continue to see money come out of technology, technology should drop a little bit further as we start to peel away the strategic quarter. Broadly, also some interesting things to note: real estate kind of being quietly up here toward the top in that ranking, with a 5, 5, and a 4 kind of trending in the right direction. Heading into our heat map. I talked about this in the past and really haven't brought it up in the recent because we haven't seen a lot of this, but we are not seeing this nice clumping up toward the top. Utilities 2, 2, and 1 across the board, financials 3, 1, and 2, and healthcare 6, 4, and then with this trading of 1, really kind of showing that strength. Healthcare came out of nowhere. Well, not came out of nowhere. Like I said, we've been seeing some attempts to come into the top over the last couple of weeks with healthcare, finally doing it so with a very large 0.57% week change. And again, we don't do this on a 1 week basis. That could get us a little bit off sides, but seeing the directional strength headed there shows healthcare with a little bit of conviction. Financials and utilities at 0.21 and 0.12 respectively. Those are very respective numbers for 2 and 3. So it's definitely showing some strength there. The rest of the heat map showing a little bit of confusion here. We're kind of spread out. The reds being a little bit thin. Overall, a lot of these sectors doing some nice relative performance things versus the market. As we saw last week, we had a little bit of a correction. Net flows over all 11 sector spiders were about -3% on the week. Friday did show a slight reversal as we did have that update on Friday, but broadly we've been seeing money flowing out of the sectors pretty strongly, being led by technology with 0.6% on the week and a 1.73% reduction over the tactical month. With technology leading for most good parts of the year, we're seeing that pretty extensive reversal that we'll see on the rainbow charts in just a minute. Going into our rainbows, utilities staying in this nice favored ranking. We did dip down into neutral, which corresponded with a little bit of relative underperformance, but right back into favored, and we are seeing that outperformance in utilities. Historically, not always gotten a lot out of utilities, but with the consistent money flows there, we are seeing some little bit of relative outperformance working in our favor for utilities. On the reverse end, technology, as I mentioned, we spent a good chunk of this last year up in that favored ranking, getting a lot of relative outperformance. We are seeing a similar move to we saw in April, where money is flowing pretty aggressively out of technology, corresponding in relative underperformance. We are seeing that kind of now, as a couple of weeks ago, we were up in the upper favored ranking and now dropping down to a void, which is corresponding to this steep decline in the relative underperformance versus SPY for technology. So what does that tell us? SEAF is doing the right thing. It is getting us into the places where we're seeing outperformance and helping us avoid places where we're seeing underperformance. Similar to healthcare, as I mentioned, prior, as we were hitting up in these little spikes of neutral, we didn't want to bite any of the weekly activity that was bringing healthcare into neutral. But as we started to build momentum, we are now up in that favored ranking, seeing a little bit broader relative performance that we don't normally, not necessarily don't normally see, but we would correspond with favored. As you can see here, as we did this in the latter part of December, early part of January of last year, getting that nice relative outperformance spike as we did hit into favored with some strong numbers. We are hitting into favored with some strong numbers again. So ideally, a little bit sustained here. We can get some relative outperformance from healthcare, but nice to see out of healthcare as we've attempted to do this a couple of times, peaking into neutral and never quite really making the hump. We are coming up again a little bit against some resistance in the relative performance chart, but again, seeing 0.57% on the weekly flow, which is pretty strong, building that momentum over the last couple of weeks. Ideally, we'll see some sustained outperformance here from healthcare as money has flown in. Real estate, I just wanted to kind of mention this. We were sitting in that neutral avoid, kind of slowly climbing ourselves up into favored. This is really kind of picking up some relative performance in real estate. Depending on what the other three do, real estate could be, as it is currently fourth in the overall ranking, just look like an interesting place to be as we kind of start to climb out of this broader trend of relative underperformance. But we are seeing some outperformance in real estate as we are heading into as we are headed into the favored ranking. This is in the SEAF signal, but seeing some kind of positive momentum in real estate as we're spending a little bit more time in this upper neutral, lower favored. We are seeing that relative outperformance. So for managers looking to get into real estate, this could be a potential time to jump into that sector. Again, not a SEAF signal, but just a place that we're seeing some nice relative outperformance as we are spending a little bit more time in that favored ranking. We had a similar situation here going back into third and fourth quarter of last year as we moved from avoid neutral to neutral favored and got up into that favored. We did see that nice stretch of relative outperformance. So, potential here, patterns reemerge, seeing a similar track in real estate. Last but not least, financials. Financials been real strong for a couple of weeks now, sitting in this upper favored ranking. This has definitely corresponded in some nice relative outperformance. We did have a bit of a check mark last week, but it kind of shot right back up there. So we are relative outperforming for financials, sitting into favored. SEAF broadly is doing a good job of getting us into these sectors that are doing some really nice relative outperformance. And we are being a little bit more sticky, which is nice to see as we kind of started to rotate a lot through the sectors earlier in this year as money was kind of flighting. We are seeing a little bit more stickiness to our models and a little bit more confidence in these SEAF signals as we are holding momentum and holding ranking for a lot longer. That is all I have for this week. I look forward to breaking down the SEAF model with you all next week, and thank you.